Barack Obama, as you know, is in China today, and we talked about this earlier. He asked President Hu Jintao to honor a commitment to allow the Chinese currency, the yuan, to appreciate, thereby relieving pressure on the U.S. economy. Well, so far, President Obama might as well have been talking to the Great Wall. There's no sign China is about to adjust the yuan's peg to the dollar. For more on Obama's efforts in China and the Chinese economy, we're joined by Andy Shia. Andy is a former chief Asian economist for Morgan Stanley, currently a guest economist, and columnist for Caijing magazine. Andy joins us from our bureau in Shanghai. Andy, let's talk about that request, as it were, for China to honor what the President Obama, that is, described as a commitment to allow the yuan to appreciate. Is the president taking the wrong approach here?
I think that the exchange rate, the U.S. exchange rate policy actually doesn't make a lot of sense right now. Firstly, China did commit to making the exchange more flexible, but never made an express commitment on the timetable for that to happen. China is not in a position to appreciate the currency now. The export sector still has poor profitability, even though the volume has picked up in the last 4 months. But in terms of prices, they are not going up. Actually, they are going down. And the raw material prices have gone up a lot. So I think the exporters are not in a tough shape, and the Chinese government is not in a position to move the currency up a lot.
So
and also,
Andy,
if the currency goes up,
if China is not in a position to allow the yuan to appreciate, what should President Obama be asking for instead?
I think that China's issue is really not the exchange rate. The U.S. is looking at something magic bullet. That's the exchange rate. Chinese economy, the main problem is that insufficient consumption. And the consumption is not an exchange rate issue. It's related to the dominance of the state-owned enterprises.